Yes, we'll talk about this, and you mentioned being lost in the wilderness, so it reminded me coming back to that financial house.
Oh yeah. Talk to me,
and
man.
and,
Talk to
and
me.
the
This is
the
really good.
we often a nursery rhyme, I guess, or a story we learned growing up, right? The three little pigs.
That's a good one.
I'll
Really good one.
explain this financial house because I think it's a really good tool. Because as I said, it's not just about specifically investing. There's a combination of things if you want to have financial freedom for the future.
Yep.
It's a few different things you need to be doing, right? It's also like you're talking about habits as well. You got to create good habits first. This is what it starts with, the little steps, which we'll get into. But this financial house, yeah, it's like if you remember the three little pigs, right? So essentially what we're trying to do is build this financial house, the same as the third little pig, right? The strong house built out of bricks, so that when the bad wolf came, which could represent, COVID or
facts.
getting fired,
Yep.
having an accident, not
Going
being
through a
able to work,
divorce, maybe.
yeah.
Right.
Then you're protected. You have your strong foundation, your strong house.
You can say to the wolf, "Fuck
Yeah.
you." You know what I mean? You can huff and
Yeah.
puff, but you ain't blowing this house down. You know what I mean? But it's true. Like,
Go find Little Red Riding Hood.
Yeah, exactly. Go find Little Red Riding Hood. That's a story in itself as well. But like, literally, how you build your house, right? You see the third little pig, he built it with hay. The first little pig, he built it with hay. The second one did it with like wood. And the guy did it with stone. So how you build your house now determines how you survive the big bad wolf.
Yeah.
So I live by the slogan, prepare that rather than repair. You see how I did that there?
But also it's a good point as well. Like it takes longer. Yes, it takes longer, a bit longer to build this big brick house.
Yep.
But it's gonna last your lifetime. Your
Facts.
child's
That's a good one. That's a good
lifetime,
one.
right? So you can't do it overnight. As a process, and it's step by step, and everyone can do it.
And those that are religious, right? The story of the wise man that built his house on a rock. That takes a long time. He had to like struggle. He did it up in the mountains, right, where there's a lot of foundation there. He broke all the wood, he broke all the stones, put them into shape, etc., etc. That takes a long time. Person that does it by the sand, right, by the beach. Oh, so nice. I get to relax, tan, everything is a lot easier. I can do little sand castles and little like avenues for the water and everything. But guess what? What happens when the wave comes in, the tide comes in? You're screwed, right? If the storm happens, you're screwed, right? But the guy in the mountain, right, with his big stone house, he's good.
Yeah.
So prepare rather than repair.
And so let's talk about the prepare.
What's the first thing we do, bro?
Yeah. So let's get into this financial house.
100%.
We'll put it up here, right? So you can see what we're talking about.
Yeah, you can follow along.
All right. So you have of course, some other financial planners may use something else, something different. Maybe it reminds you of a pyramid and these kind of things. But a house is a great term because it does represent security,
stability.
And when you build a house or any building, you start from the bottom and work your way up. So it's the same case with this, right? And you see at the foundation is just responsibilities. That's the responsibilities you have to take care of yourself. Maybe you have your family, your health to take care of, right? These are just the basics.
And recognizing that you're the king in your castle.
Yeah.
You're the CEO in your company, right? You have to take responsibility. No one else can do it for you, right? And you don't want anybody else to do it for you, right? You want to take total ownership.
Yeah. So then we come to these pillars, right? These three pillars, which are kind of essentially the support, the strength of your house. This is where you should start. This is paying yourself first. You get paid, take care of these three pillars, and then what's left is your lifestyle, right? So when you see these three pillars, I guess we start on the one on the right. It's the most straightforward one, which is securing of property. This is anything expensive, you own a house or apartment or a car, whatever. Of course, you get it insured, not because you plan on having an accident or it blowing up or something, right? But things
protect the value. Yeah, right? To protect the value of it, right? You're kind of protecting, the way I like to put it simply, I'm protecting the things I bought with my past money.
Yeah.
You know what I mean?
Exactly. And no one questions that. They understand the insurance for a car and house, fine. When we go to the left here, securing of income, right? This is a better term, income protection or securitization of income, which represents life insurance, right? Which is a little bit of a
sticky one.
Yeah. And I find that a lot of people that just diss it is because they don't understand it.
And we'll talk about this in greater detail, right? We're just going to go over the basics, right? But we're going to go over the details, why people are afraid of it, what really life insurance covers, and how it can actually help you, right? Because that's the whole idea of it.
Because most people think that life insurance is, in case I die, someone's going to get some money, right? Yes, this is the worst case scenario, right? But what happens if you're in a car accident? What happens if you get hit by a tram? Or in a tram accident, break your leg, or you dislocate your arm, and you can't work for a few weeks or a few months, cancer, these kind of things. Anything that prevents you from working is going to have a huge impact on your finances, because when you're on sick leave, you get about 50% of what you're used to. But most people, particularly expats here, spend way more than 50%, right? Their expenses are usually high. And so that means it creates financial problems, financial difficulties.
But wait, can't I just ask my landlord to pay like 50% of the bill? If I'm getting just 50% of the income now?
You can try.
Those that can negotiate like that, DM me, man. I want to learn from you for sure. You know what I mean?
Yeah, exactly, right? You still have the same rent to pay. You got to eat. Maybe on top of this, you have medical expenses. So essentially, life insurance is insurance to give you money in case of these bad circumstances,
to meet your commitments,
unpredictable circumstances.
Exactly.
So you can still pay all these things without the stress. Because also, this is a problem that when you have financial burdens or financial stress, it doesn't help you get better.
It's actually worse, right?
Yeah, it makes everything worse.
You're just trying to get yourself to some kind of stability or some type of condition that you can get back to work
properly.
Facts.
So we'll do a topic dedicated to that, because I think it's an important one, and a lot of people don't understand it. The one in the middle, a lot of people do understand, and this will be our next
our
podcast,
second,
right?
This is the second episode, guys. This is the big one.
This is pension or retirement, right? Putting money aside now for future you, which a lot of people find it hard to do. Man, I wish I started when I wish we were taught, as soon as you get your first paycheck, put 5% of it even back then towards your retirement, right? Man. Because when you get older, I'm 43, it's tough.
Oldie.
Yeah. Great hairs.
But let me have a go explaining this one, because
go for it.
The best way I like to look at retirement or pension planning, essentially, how can I secure my current lifestyle when I stop working in retirement? And so you have to recognize there are two ways to do it, right? You either do it through yourself or through the public government, right? And so most people don't do anything, so they're reliant on the government, right? So then you need to understand, okay, how does the state pension, the government pension, the public pension work, right? So imagine three types of people, okay? You have current workers, you have the state, the government, and then you have pensioners. So most people feel that, okay, I have my little piggy bank. Oh my God, it's so cute, the little tail there and everything like that. And every month out of my gross income, I get like 5% or 6%, depends on the country, right? Goes into that piggy bank called Leigh, fat little Leigh. You know what I mean? And so then after 40 years, 50 years, whatever, I can break it, right? And then I can live off that money and retire. That's how we feel. It makes sense. That's how we've been taught, or that's how we've been, knowledge has just been somehow drifted into our head somehow. But in practice, this is not how the public pension works. So imagine the three people like I mentioned out. You'll see on the screen as well here. You have the current workers, you have the government, and you have pensioners. What you feel you're paying into your little piggy bank called Leigh, right? What you feel is going into your little piggy bank Leigh actually just goes to the state.
Yeah.
That's social security tax, guys. Right?
Yeah. It's not for you.
It's not for you. The government takes it and then they give it to the current pensioners. Now, once you understand that, then you understand that we're in a bit of a sticky situation, right? And to know more about it, we'll talk about it next session, right?
Yeah.
So keep see us for next one, right?
Yeah.
Cool.